Good morning, it's Harvey Jackson. I'm going to talk a little bit about the chaos that was going on yesterday. 90-day pause on reciprocal tariffs. So there's still a 10% on the countries that had the higher tariffs, but there's still there's still tariffs, but the lower 10% that's across the board. And USDA stocks report is out today. So let's just have a quick look. This is the estimates right now for the stocks report. So if there isn't any more Trump news, this is going to be maybe put to the back sidelines. But guys like me and others will be paying attention to this stuff for sure. So the stocks soar, and I hate to say it, but you can see on this chart exactly where he suggested you buy it. I'm thinking, yeah, whatever. There's probably Harvey's conspiracy theories here. He bought it there, and of course he put out his news there, and the market rose. So he probably got some gains, a little bit of money in his pocket for that. Anyway, let's move on. United States import from China. You can see there's a lot of things that they do import. And you may want to flip back and forth here because this is what the United States imports from China, and this is China imports from the United States. And there is differential, of course, but the ones that most important for us right here is these ones here, of course, the cereals and the oil seeds and whatever else, right? So and there's meat over here, edible. Yeah. So the ag sector, it's not as big as the electrical machinery and cars and all the plastics, you name it, but it's still pretty big. So 90-day pause. And what did it do to the market? You saw that on the first graphic. It was pretty substantial. But this is still hitting the news. Well, Asia markets actually recovered quite substantially as well. U.S. did as well, except for China. And I think China will end up coming to the market or to U.S., but it's going to be on their terms as well. So it's not just hey, I'm going to force you to do something. So look at this here. They're looking for European markets. And some cooperation there to be able to get some more goods going there. Same thing here at EU. Palm oil ends higher on Dalian rising inventories. And again, when you have high prices, you do, and it limits the buying action, so you end up with more inventory. It's not a rocket science there. So this signing of the executive order happened yesterday, and the article that I was talking about yesterday, where there's a reluctance and a hesitancy by, say, even Japan to have anything but, or all ships that are made in U.S. and that will be allowed into the ports because of the extra port docking fee charged to Chinese ships. And I don't know the exact number, but it's like 60 to 70% of all cargo ships are Chinese made. So this is probably a more rational to try to rebuild the shipbuilding industry than having a 1.5 million dock fee. But who knows? It still might stick there too. Just looking at a little bit of weather here as well. Just throwing this in here. So you're looking the west versus east, temperature higher, but what I want to point out here is the moisture that the east has been getting. They're getting flooded over there. So there's a west versus east scenario here for sure. And you can see the drought building in these areas, but you're actually flooding in these other areas. So let's just have a quick look at the market. Canola is down, but rapeseed was up. So we'll see if that's going to have any impact on the differential. I know it looks almost the same, but soybean oil had a pretty good leg up yesterday and only 0.2 of a cent lower. Palm oil is up. Crude oil down a bit. It says $1.43. So we'll see where that settles. And the soybeans up, and some of the wheats are up as well. Let's just have a look at it here. Canola, pretty nice trend on the front month. And other than a couple of days there, we've got a pretty good run there. November, we're looking for that 698 target level. So entry on a day like today, a little bit of a pullback would be beneficial to maybe get in. Here's your European rapeseed. It is $514, but what does that mean? We're looking at $152 differential between Canadian canola and European rapeseed in Canadian dollars. Your soybean oil, nice long candle yesterday, a bit of a recovery, which was well needed after the big climb that it had last week. So yeah, it's supporting canola for sure. And palm oil, a little bit of a recovery from its fall apart here. This is crude oil, and I'm going to maybe talk about crude oil. This is our economic woes, and this is the tariff. I expect this to probably move back up into this area here, at least for the next 90 days, if the world is going to accept lighter tariffs. But the weight on the tariffs could actually maybe only let it rise a little wee bit, but we'll see where it ends up there. I think it's a better indicator of the world economy than the S&P 500. So this is your diesel fuel chart. Lots of length yesterday, and pull back from its highs, but we'll see how this trades throughout the day. I would expect it probably keep going up a little bit here if there's a little less pressure on the U.S. here. Soybeans, pretty good recovery. You can see, and it's probably coming up against this trend line. Whether that's a good place to draw the trend line, but it probably has to get through there and get through that gap that it made, and it looks like it's almost filled the gap, but it's not quite there yet because you have to get through there, and once you get through there, you're changing trend lines. Soybean meal, same kind of from the bottom. It's been a pretty good recovery, but it's still, you're up against your short-term moving averages, and then you got your trend line here as well that you would have to beat here. Canadian dollar, pretty looks like it's on a recovery, but I'm not going to hold my breath on this one yet. We still got some Canadian politics that's absolutely ridiculous that's going on here as well. So wheat, spring wheat actually had a pretty good recovery, but you still have to get above that area there. You call it 615 or 620 or better before I get really excited about this chart here. So here's your red winter, and that same point on the chart is way up there. Like, you have to have a lot more recovery on winter wheat. And here's your corn, and the corn move has been pretty good, but it has to get above this value right where it is. It's got to trade higher, but a really good recovery. So corn's doing a lot of the work. And USDA crop production report, SnD today.